Ladies and gentlemen, good day and welcome to the Share India Securities Limited Q3 and 9M FY'26 earnings conference call hosted by Valorem Advisors. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Ms. Hena Khatri from Valorem Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Hena Khatri from Valorem Advisors. We represent the investor relations of Share India Securities Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and the 9 months ended of the financial year 2026. Before we begin, a quick cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Kamlesh Shah, Managing Director, Mr. Sachin Gupta, CEO and Whole-Time Director, Mr. Abhinav Gupta, President, Capital Markets and Products. Without any further delay, I request Mr. Kamlesh Shah to start with his opening remarks. Thank you and over to you, sir.
Yeah, thank you, Hina madam. Good evening. It is my privilege to present financial performance of our company for third quarter financial year 2025-26. The Indian capital market outlook for year 2026 remain cautiously optimistic despite underperformance in year 2025 and recent volatility, with analysts forecasting double-digit return driven by earning recovery and supportive policies. Benchmark indices like Nifty and Sensex are rebounding from the recent dips. Key forecast supported by GDP growth estimate of 7.4 to 8.2% and robust domestic inflows. Long-term model suggests even higher averages with upside potential and consolidation. Free trade agreement with EU and other countries will diversify export initiative. Union budget may also provide momentum to the economy. Policy support. Reserve Bank of India's repo rate stands at 5.25% after 25 basis point cut in December 2025, providing liquidity and easing cost while maintaining a neutral stance. SEBI reforms are easing FPI and deepening market, along with RBI's push for domestic-led capital stability, reducing FPI dependence. Market drivers. Strong macroeconomic tailwind include earning rebound in IT, consumer sectors, and credit growth, plus government initiatives like tax cut, domestic SIP, and DII buying offsetting FII selling is bolstering resilience. Risk ahead. Short-term range-bound trading persists due to global trade tensions, FII outflow, and muted IPO activity. Inflation edging up may delay further rate cuts, capping upside for the near term. We began this financial year with a focused strategy to drive disciplined growth, strengthen operational resilience, and deepen customer engagement across all our business. I am pleased to report that the result for quarter 3 reflect solid progress in our standalone performance, although consolidated results were comparatively lower for the quarter. Now, let me walk through the detailed financial performance. First, we will discuss standalone results. Quarter 3, financial year 2025-26. The total revenue from operation stood at 305 crore, reflecting year-on-year increase of around 18%. Profit before tax was at 107 crore and profit after tax was 81 crore, making significant increase of 34% and 35% respectively on year-on-year basis. Earning per share for the quarter on standalone basis stood at 3.69 rupees based on face value of rupees 2 per share. Now we shall come to consolidated results. For quarter 3, financial year 2025-26, total revenue from the operations was 372 crore, reflecting year-on-year increase of about 9%. Consolidated profit before tax and profit after tax stood at 122.35 crore and 89 crore, reflecting an increase of approximately 9.32% and 8% respectively on year-on-year basis. Earning per share for the quarter stood at 4 rupees 6 paisa based on the face value of rupees 2 per share. We have also declared third interim dividend of 40 paisa per share. That comes to around 20% on the face value. Key financial ratio also shows healthy trend. Net worth on consolidated basis stands at 2,600 crore plus. Debt equity ratio is comfortable at 0.24%. Current ratio is at 2.12 times. Operating profit margin stands at 43% and net profit margin at 24%. Looking ahead, we remain cautiously optimistic about the fourth quarter of the year. While external environment continues to present both opportunities and challenges, we are well positioned to sustain our growth trajectory. We shall continue to focus on foray into debt market through our subsidiary, expanding commodity trading, expanding our core business with efficiency and discipline, accelerating digital and operational innovation, strengthening our product portfolio by adding PMS, MTF, and market making skills. Focus on retail business and wealth management. Our strategic initiatives are progressing well, and we expect them to start delivering incremental gain in coming quarters. In closing, I would like to express my sincere appreciation for your continued trust and support. We are confident in our ability to navigate the evolving business landscape and deliver on our commitments. Our focus remains on driving long-term value creation for our shareholder, partners, employees, and customers. Thank you once again for attending this meet in large number. Over to you, Sachin, for the further commentary. Thank you.
Thank you, Kamlesh sir, for the details you shared about the Q3 of this financial year and future prospects and where we are focusing. I just give a brief about the numbers in different departments and where we are focusing ahead and the new initiatives taken by the company in this quarter. So thank you everyone for joining us for Q3 FY'26 performance. First of all, I would like to share my satisfaction that overall industry has stabilized, especially this sector. And now after the brief downside we have seen in last quarter, especially last financial year, after that we have seen a steady growth or maybe a stabilization in the industry, and that gives us more encouragement. Going further, it gives us more room to experiment and look for the new verticals to grow. So market participation is also improving slowly. Volumes have start going up now, and we think that we have touched the worst period, and not up, but at least stabilization we can definitely see. We are quite hopeful that we have seen good 3 quarters as industry-wise. We're hopeful that quarter 4 should also be better than the previous 3 quarters, or maybe we'll do something good in quarter 4. So what numbers have changed in quarter 3? I will just explain those numbers. So MTF book have increased marginally by 3% quarter to quarter. It was 443 crores in quarter 2, which have gone up to 457 crores. I would say it's not only marginal increase, but we have seen that market was very volatile and shaky, especially in the last quarter, and especially small cap and mid cap stocks have seen a lot of value erosion in this quarter. But still, our sales team, I should give credit to the sales team and the entire retail team, that they have worked really hard to maintain the MTF numbers, and rather maintaining, we have seen an increase of 3% on quarter-to-quarter basis, even after the extremely volatile market. And ADTO, average daily turnover, has gone up from 7,500 crores in quarter 2 to 9,700 crores in quarter 3. That's a really big jump, 2,200 crores ADTO jump from quarter 2 to quarter 3. This is a 29% increase in ADTO in quarter 3. That's what I was just mentioning, that I believe that after the stabilization, volumes have started growing up, and we are hopeful that now the base has been set, and going further we'll see better times for this entire sector, financial sector. And as Kamlesh sir explained, commodity has played a vital role in this ADTO, and going further we believe like the gold, silver and all the metals are volatile. Retailers and the traders' interest in commodities have increased, and we'll see. We believe that going further, commodity will also show good numbers. It will help in the growth of the overall business. Coming back to the broking clients, as we all know, as markets are volatile, and active clients, number of clients who are dormant accounts are going down, and active clients number of clients is going not increasing at all, but net clientage has not decreased, at least on quarter to quarter basis. We have seen the increase of 1% increase in the number of active clients in Share India overall kitty from quarter 2 to quarter 3. Again, I will give credit to the entire retail team, that they worked really hard to add a lot of new clients, because clients who are who are stopping their accounts is more these days. But after so much effort on the ground, we were able to at least maintain, and we were able to see a bit growth in the number of active clients from quarter 2 to quarter 3. And on institutional client base side, I would say that's a really encouraging number. So we have seen a 13% growth in active clients in the institutional side, from 154 to 174. It's a growth of 20 more institutions have empaneled us as their broker, and that's really encouraging. So even after the operation of only 2 years in the institute desk, we have now 174 institutions active with us. This is a really fairly large number, and again, kudos to the entire institutional team led by Mr. Kalpesh Parekh. So 13% increase in the active number of institutions from quarter 2 to quarter three basis. This is an overall view of the business in quarter three. What challenges we have faced and on which side business has grown. Now I just want to throw some light on the future projects we are working on, and also some initiatives we have just taken. So coming back to the future projects. So wealth, as we are explaining since last 2 quarters, wealth is a core area where we are extremely hopeful, and we are working very hard to crack this. And I hope next financial year all the planning has been done, recruitment has been still in place. Still some fairly mid-sized managers have been appointed, and execution plan is on the table now. So I believe from the Q1 of next financial year, we'll see that wealth management team will be on the ground, and next financial we see good numbers coming from the distribution of third-party products. And also on PMS side, yes, there is some delay in PMS because of some compliance issues. And PMS is, anytime, next 10 to 15 days, PMS will be launched. And once that PMS part is done, AIF, we have applied for the license in the new company formed called, just a sec, Share India Wealth Multiplier Solution Private Limited. So new AIF license category has been applied in Share India Wealth Multiplier Solution Private Limited. This company is a wholly owned subsidiary of Share India, and so this company will take care about this is the first AIF we are launching. Going further, more will come, and so here will be manufacture all our products, and the distribution team will also be distributing these products along with the third-party products. So wealth management side distribution will kickstart from next financial year. Even you can see AIF and PMS will see some traction or some numbers coming from the AIF and PMS side also. This is for the wealth management side, and one more company has been formed. I explained in the last Concall, Share India Grey Hill partnership for the debt market. So taking it forward, so company has been formed. Company is called Share India Cred Capital Private Limited. It is a subsidiary of the Share India Securities. So this company has been incorporated on 6th January 2026. So this will be a technology-driven fixed income investment distribution platform led by the Goel family. They presented their part in the last con call. So taking ahead the Grey Hill partnership, so company has been formed, and again this company will be operational from the next from the Q1 of the next financial year. So next year you will see a lot of new initiatives will start showing some ground, like AIF, PMS, wealth distribution, and Share India Cred Capital also will be operational from the next financial year. Going further, I would like to explain about Silverleaf. So Silverleaf, as I explained last quarter, SEBI approval was received. So again, things are in NCLT. So they are in advanced stage. So we believe NCLT approval should come in by end of this quarter. So Silverleaf merger will happen next financial year. That will also add to the numbers of the Share India in next financial year. That is a big thing we all are looking forward. So that will give us again more revenues from the different streams by the highly professionally trained traders. So next financial year, we are hopeful that a lot of new initiatives will take place and they will start showing results. Also, as I explained in last phone call, that we have plans of branch expansion. Again, that branch expansion plan we are still working on, and we'll start with 5 pilot branches and locations we are in discussion. So from April onwards, we'll start all these branches at the 5 different locations. So again, Q1 next financial year. So next financial year, what initiatives primarily we are looking at? AIF, PMS, Wealth, Silverleaf, Share India Cred Capital, and the branch network expansion will start from the next financial year, primarily targeting the retailers in Tier 3 cities and looking for the possibilities to expand the MTF book with the distribution of wealth products. So these are the initiatives we are having in mind, and going further, we believe a company like Share India will be able to see new heights of growth in next financial year, and as lot of new initiatives are coming in, and we are hopeful that Share India is keeping a great control on the current business, and everything is everything is intact. Team is doing really hard work and motivated, and we hope that numbers will start showing results from the on the positive side going next from the next financial year, especially from the Q1. I think that's it from my side, sir.
Operator, please open the round for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsh, an individual investor. Please go ahead.
Hello. Thank you for the opportunity. So I have a few questions on the NBFC vertical. So what is the reason for continuous decline in NIMs over the last few years?
Sachin sir, you want me to take that up?
You please start.
Yeah. As we have been very continuously saying that initially we were doing a lot of unsecured lending in Tier 2, Tier 3 towns when we were growing that book in fiscal year 23 and fiscal year 24. Within the span of fiscal year 24, we moved towards a secured book, which currently contributes around 40% of the book. And as the industry practices in secured book, there is a comparatively lower amount of NIMs that you maintain. So the blended NIMs that you would see, we'll see a few more 100 basis points downward traction before they stabilize at that level.
Okay, and also our client base and branch network is also reducing. So what is the reason for this, and in future, what's the strategy for the same?
Yeah, so, as we have continuously maintained in terms of we are sort of reduced our unsecured book, which was given in Tier 2, Tier 3 towns. So we have sort of, in terms of branch network, we think we have mostly downsized whatever that we had to do. Of the 250 odd crore book that we have currently, around 100 crores is only present in the unsecured nature. So in terms of the going forward, as earlier stated as well, we will continue to focus on the secured lending, which would be a lower ROE but a much more secured product for the growth aspect of the company.
Okay, and my last question, what is the reason for increase in the NPA for Q3 versus Q2?
So it's between Q3 and Q2 that we were, as we had said, in terms of unsecured book, we were already seeing little bit of stress that was there in the last year as well. And we were very conservative in our approach to sort of start reducing it before the industry. So hence, I think, as we were sort of downsizing our unsecured book, there were sort of some defaults that we had to take on our book. But going forward, we should see these kind of NPAs going downward only. Plus, as our secured book grow, the blended NPAs will go further down from those levels.
Okay, sir. Thank you, sir. That answers my questions, and I'll get back to the queue.
Thank you. The next question is from the line of Rohan, an individual investor. Please go ahead.
Yeah, hi. Thank you so much for the opportunity, sir. I just wanted to understand more on the subsidiaries part. So, like, we have U-Trade, we have Algo Wire, and we have Silverleaf. So, I think I understand it is in the algorithmic trading segment. So, how is that, and what is the revenue segment what is the revenue we're getting from there, and how is the growth going forward, and what is the run rate we expect from these verticals?
May I start, Abhinav? Then you can.
Sure. Please, sir. Please go ahead. Yeah.
So, like you said, 3 subsidiaries on the tech side. So Algovar is a subsidiary, which is focusing only on the low latency products like high frequency trading, maybe helping with FPGA technology and all. So Algovar does not provide any service to any outside client apart from Share India. So Share India is the only client because they are serving only to the parent company and to our needs, correct? So Algovar is not the company which has been created to get the more revenues from the industry. They are created to help the parent company to grow, especially on the low latency side of the trading. So one. Two, Silverleaf. Silverleaf is an HFT-based trading company. As I said, merger will be done next financial year. So we are expecting once the Silverleaf will be there, we are expecting not less than revenue side. I am talking about gross revenue. It should not be less than anywhere between 50 to 60
आपण ज्या व्यक्तीशी बोलत आहात त्याने आपला कॉल होल्ड वर ठेवला आहे. कृपया लाइन पर रहा. आप जिस व्यक्ति से बात कर रहे हैं.
Hello.
Hello.
Yeah.
Mr. Rohan?
Yes.
There was some issue, I think.
Yes.
Yeah, sir, please continue, sir. Sachin, sir, please continue.
Okay. So, Mr. Rohan, are you there?
Yes, I am here, sir.
Okay. So, Silverleaf, we are expecting, once the merger will be done, we are expecting top line of 50 to 60 odd crores. And that's the initial revenues. And we are very hopeful the kind of, technology they are bringing in. Going further, if the company parent company like Share India is there and we just help with the more risk appetite and more capital exposure to them, then these numbers can easily multiply by 2 to 3 times in next 1 year or 2 years. So this is Silverleaf. And lastly, U-Trade. So U-Trade is a company who focus more on the customer-facing products. And in last 1.5 years, probably 2 years, they are only developing products for the, by help of Share India. Now they are all set and they have created a very fabulous product of algo trading based on AI for the retailers. And the product has been delivered to the Share India. And now next financial year, the core management of U-Trade is focusing on opening U-Trade for the multi-broker. They will offer the product to the multi-brokers, not only Share India. And we believe that, U-Trade numbers should also multiply by 2 to 3 times in next 1 or 2 years. So U-Trade and Silverleaf should give us really good growth in next 2 years. Algovar is just a support company which is helping the parent company. So as SEBI has opened up for the retail algos, so demand is there in the industry and the kind of organized and future-looking product they have developed, that's one of its kind. And once the management will start meeting and start tying up with the larger brokers based on the retail side, so we believe the revenue will definitely go up and people will like their product. And Silverleaf, as I said, again, they're good in trading side. Once the capital is provided to them, then their number will also go up. So both companies should show at least 2 to 3 times growth in revenue in next 2 years.
Also, I would just like to clarify, as Sir said, Algovire caters to the need of the parent company, which are used by parent company to grow their own retail business. So Algovire sort of gives us the low latency solutions, which are the bread and butter for Share India Securities and hence used by them or the clientele of Share India Securities, and the charges to them is in form of broking income. So a lot of broking income growth that we are expecting should be driven from those solutions which are created by Algovire. And U-Trade and Silverleaf has been clearly explained by Sir very clearly in his statement. Just a note, Silverleaf is yet to merge, as explained by Sir earlier. Silverleaf numbers will start showing for the first time from fiscal year 27 onwards.
Okay, got it, sir. Thank you so much. That gives a lot of clarity. That's it from my side.
My pleasure, sir.
Thank you. The next question is from the line of Sejal, an individual investor. Please go ahead.
Hello.
Hello, ma'am.
Hi, sir. Thanks for the opportunity. So I just wanted to ask a question regarding the insurance segment. So what would be the reason for the declining revenue from that segment?
No. Please answer.
No, sir, please continue.
No, I don't think, revenues, can you please check? Revenues have not shown any declining. Revenues are up.
Ma'am, insurance, as you would appreciate, is a little structural issue where a lot of business happens in the Q4 onwards. So for an insurance company, measuring only Q1 or Q2 or Q3 numbers would be an appropriate number. JFM quarter is a very strong quarter, and the company in the overall growth number should be on a growth trajectory. In terms of Q3 to Q3 comparison, if you look on year-on-year basis, there might be a little drop, but I think that's a very minute drop in terms of numbers. The projections for the full year are on track for the purpose.
No, so full year projections, we are expecting at least 20 to 25% growth year-on-year basis from April to March, because as Abhinav said, JFM is very crucial. So a lot of business discussions are going on, and we hope that will convert into the real business. And we're expecting 20 to 20% growth, 20 to 25% growth in the overall business in the insurance side.
All right. And also, sir, about our broking business. So what would be driving the growth in that segment?
Ma'am, if you look at the micro level analysis, the biggest contributor has been the MTF in the last couple of quarters, and especially in the last fiscal year. So the interest income, which is driven by the cash market, as sir already explained in his opening comments, the volumes have stabilized in this fiscal year. So the cash market turnovers are more or less back on track what they were at the earlier levels. So the interest income would be driving as a component of the broking income, plus the new age products that we are doing with muted algos and algo wire, which will help us create a niche into this segment, will continue to bring more broking clientele into the forest.
Also, I would like to add here, as Abhinav said, MTF is one driving force, and as algo-based platform, that's a really good forward-looking platform has been created by UTrade to treat all the wealth-based products distribution which we are starting. So that will add lot of value to the retailers. Like there is a lot of demand for AIS, structured AIS, PMS, and debt-based investments. So which right now Share India is not providing to the clients. So once all these things will be in kitty, as I said, from Q1 of next financial year. So along with that, we are opening so many branches on ground in Tier 3 cities. So once all these products will be introduced, we believe that, Share India, it will help Share India to grow their retail base on the ground.
Okay. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Nitin, an individual investor. Please go ahead.
Actually, what are the growth plans of going retail broking in the segment by Share India? Like Grow and Zerodha are expanding massively to capture the retail clientele. What are our plans to go to these segments and all? And what are the plans of getting MTF books to reach to mass people of India? What are our plans?
So, as sir, you said, Grow and Zerodha, they are also focusing on, everyone is struggling with the numbers. So, they are also focusing on MTF and wealth products. So, you can see, Grow has started MTF last year. Zerodha started MTF last year. So, MTF is one thing which is very sticky to the retailer. So, Share India is also. So, there is a, as per SEBI circular, there is a limitation that a broker cannot fund more than the 50% of their net worth in MTF. So that gives a lot of scope for the business in Tier 3 cities. So Share India is also focusing on MTF, like they are creating their book online. We are focusing on offline. Everyone is working on their strength. So MTF is one thing, and as I said, how to grow. Next 2 year target is to double the book from 450 odd crores to anywhere between 900 to 4 figures to 1,000 crores is our aim. And how we'll grow it is very simple. Like as I said, we are planning to start opening our branches on ground in Tier 3 cities where there is still a lot of scope. People who are associated with the brokers whose net worth is not so much that where they can offer good MTF books to good MTF line to the clients. So there is a scope of increasing the business. So Tier 3 cities is our focus. And going further, like if we get, if we are successful in running these 5 pilot branches, we'll then keep on increasing the branches on the ground. And also we are focusing on adding more associates on the ground in central part of India and southern part of India, and also on the west side. So right now we are mainly in the northern part of India. So we'll increase our base in terms of branches and more associates, and using all this network, we'll try to increase our MTF book, and target is 4 figures in next 2 years, nearly doubling the book from here. And I think that was your question. Is there anything else in your question? I got disconnected in your question.
Yeah, actually, I want to know what Share India is doing to reach the mass people. We are seeing daily advertisements are coming in the TV channels by every brokerage house, Zerodha, Grow, Kotak Bank. They are showing there are some more of like them. They are continuously giving ads and all of MTF books. Come and have a MTF with it. What we are doing to capture these clients, or what we are doing digitally to capture these clients?
Abhinav, you want to answer this?
Sure, sir. So you need to understand, when you say mass level, there are different sort of business strategies that are involved in it. Comparing company like Share India would directly with like the Grow or Zerodha would be a very unfair assessment. We are more of a physical presence, brick and mortar kind of a player. Our strategy is more on the lines, as Sir explained already, in offering multiple products with high touch base points. Also in terms of being focused towards insurance and other wealth management products. In terms of retail network, neither are we targeting being the biggest player in terms of the number of retail customers. So when you say mass, there are the different strategies that is involved, and as explained, will be focused more on high touch businesses with more physical presence rather than being focused more on branding or advertisement purposes.
No. I just want to add 2 things. As you said, so Share India is also planning to digitally advertise the products like future algos and MTF and other products digitally, marketing or branding for the branding purpose also. So Share India is planning to start that in-house. Earlier we were trying to deal it through the vendors, which was an unsuccessful attempt. So Share India is trying to, setting the base in-house, and will start marketing our products online on all the digital platforms possible. And also the TV ads and all these things, they are continuously coming on the different channels, and they will will be marketing our products as I said, MTF and other products. So we are hopeful that, by way of marketing and physical branches on the ground, it will help us to connect with the masses of the Tier 3 cities.
Okay, thank you. And one question more. How much Share India is having a stake in MSC, the new exchange, which is going to launch on 1st of February?
I think, Abhinav, we are holding 3% equity?
3% plus, sir. 3% plus.
3% plus equity still Share India is holding in MSCI.
Okay, thank you. That's all.
Yeah, thank you.
Thank you. The next question is from the line of Rahul, an individual investor. Please go ahead.
Hi, good evening, everyone.
Yeah, good evening, sir.
So the turnover has shown a significant growth in the quarter 3. How should we interpret this trend, and the management look out for this?
Sachin, sir, you want me to take that up?
Yeah. Abhinav, you start, please.
Yeah. So, sir, the ADTO numbers that you refer to have seen some growth in Q3 specifically, which are contributed by the stability that has come in the cash market and also the commodity market growth that has been there. Commodity market, especially in the last quarter, has been seen a really uptick, which we believe is a structural number and should continue at those similar levels. Going forward, we continue to believe that our ADTO numbers should remain in the similar numbers with plus minus 5% kind of a variation going forward. As the cash market and the entire F&O market is now the entire downside has been priced in and has seen a lot of stability in last couple of quarters. And commodity uptake, we believe, will continue, or if not even continue, will be standard at this level going forward, at least for a few more quarters.
So I want to add some points. So I tell you, sir, overall, see how the market behaves. When there were, a lot of regulatory challenges were coming, changes were coming. So people tend to, stop, wait and watch and then plan their strategy. Then slowly and gradually they get stabilized in the market. So I give you very simple information. Even yesterday was a Nifty monthly expiry, correct? And Nifty options has touched the highest volume in Nifty options yesterday only. So that was more than 90,000 crores, correct? So this was the highest volume in Nifty options after the, when SEBI stopped Bank Nifty and 5-day expiry. So this was the highest volume in Nifty, especially on Tuesdays, correct? So we can easily see participation has started going up slowly and gradually, and in all the products, like by the retailers, by the traders, by the speculators, by everyone. And secondly, volatility is high. So when the volatility is high, so regular activity tends to go up. So as I said in my early comments, we believe that at least stabilization is there. So the earlier trend was going down. Then we see a stability for 2 to 3 quarters. Now from Q3, we have started seeing some, growth in the volumes by all the segments. And also, commodity has added lot of numbers in ADTO. Again, thanks to the volatility, gold and silver prices, all the metals and everything. So all these things put together, overall participation in the market by all the segments is actually growing. So as I shared the Nifty numbers of yesterday's expiry, it was highest number in Nifty after they shifted to the Tuesday.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Danish, an individual investor. Please go ahead.
Good evening, sir. Sir, I have just one question. So basically, merchant banking revenues appear to be lumpy. Can you please provide some visibility on the current IPO pipeline and your confidence in sustaining deal flow for this?
Yeah. So, sir, you're absolutely right that merchant banking numbers would continue to have some cyclical effect because of the market conditions. We have around 6 approvals in hand. Going forward, to give you a little bit more visibility, as said earlier, we would continue to focus more on main boards because the cyclicity has far bigger impact in SME markets rather than the main board markets. We have filed one main board IPO in September, which we are awaiting approval, which we should hopefully open in next quarter. We have also filed one more main board IPO in January this year. So our strategy in terms of deal pipeline would be to let the market stabilize a bit when we go ahead and complete the approvals that we have in hand for the SME market and continue to focus on the main board IPOs, plus work on the new companies and the deal pipeline from our next year onwards. We believe in terms of market conditions, next quarter would also be crucial before we start seeing some sort of a very significant uptick in the market sentiments.
Okay, thank you, sir.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions from the participants, I now hand over the conference to management for closing comments.
Kamlesh sir, you want to take it up?
Kamlesh sir, are you there? Abhinav, you can take it.
Yeah. So on behalf of Share India, we would like to thank all the participants for giving us a valuable time. The last quarter has been a quarter where we have seen some sort of stability coming into the entire ecosystem, which we believe with your support will continue for this quarter as well. At the end of it, thanks a lot for attending the call. Thank you.
Thank you, everyone. Thank you.
Thank you.
Thank you. On behalf of Share India Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.